Welcome back to the channel, my fellow investors. My name is Ishaan, and let's talk about Alibaba stock. The stock, after months and months of downtrend, is finally beginning to move higher after recent positive sentiments. Now, is this a time for Alibaba to finally reverse, and is it a screaming buy, or is this just another false rally and we're going to continue even lower? Well, in this video, I'm going to be breaking down everything that you need to know about what's going on, along with Alibaba's full discounted cash flow model, to really see, is Alibaba truly a screaming buy at these levels, fundamentals and news, everything combined. And along with that, at the end of the video, I'll also be breaking down Alibaba's full technical analysis, price prediction, and my personal strategy of exactly where I plan to buy and enter, and exactly how I plan to profit. So all I ask in return is that you subscribe so that this video can be pushed out to more Alibaba holders who need a better understanding of what's going on and where the stock could be heading. With that being said, let's jump into the video. Now, the reason behind this bullish sentiment comes after China passed a few regulatory measures. One of them includes the fact that users can now opt out of having their data tracked and controlled by these large data companies. And apart from that, Chinese regulators are considering pressing data-rich companies to hand over management and supervision of their data to third-party firms if they want US stock listings. So now that this has all happened, stocks are finally moving higher because investors now understand what's actually going on. Because before, there was a lot of uncertainty as to what the Chinese government would do and what they would implement. But now that investors understand that the Chinese government is focused behind protecting data rights, which is not really going to affect the core business of a lot of these companies, it's getting more bullish, and people believe that this might be the end, and this is only what the Chinese government was really focusing on. Now, as a holder of multiple Chinese stocks, I appreciate this bullish sentiment, but I don't necessarily believe that the worst is behind us. As we know, there are now rumors that China could be implementing one of the biggest wealth taxes ever seen to essentially bridge the gap between the rich and the poor. Now, the wealth tax could hurt the wealthy, but also wealthy companies with a lot of cash would increase taxes. So that's definitely something to consider. And so that's why right now, even though despite things are beginning to look bullish and bullish sentiment is returning, I'm being cautiously optimistic. I'm slowly beginning to look to buy and add to my positions, but nothing too major, so that if, let's say, China one day just came out of nowhere and announced a wealth tax and a fury of other regulations, I'll be better protected that way, and if it did drop, I could always dollar cost average. But with that being said, these things could never be implemented, and even if implemented, Alibaba stock is still dramatically undervalued for the reasons we're about to discuss. I really believe that this renewed confidence has definitely marked at least a bottom for Alibaba stock, where we now begin to consolidate rather than, continue crashing or maybe even big moves to the upside. I think this has marked a base, a shift in the sentiment, and now buyers are slowly returning, and I think we'll see a period of consolidation where the stock finds a bottom. Now, a few reasons behind my rationale as to why Alibaba is dramatically undervalued include the obvious. It's still a strong growing business, and their cloud business, which is overlooked by a lot of people, is expected to generate approximately $35 billion by 2025, and that's an extremely profitable part of their business. And then e-commerce growth is expected to grow by $1 trillion to a total of $3 trillion in just the next 3 years by 2024. But that's just one part. Now let's jump into Alibaba's discounted cash flow model, where we can get a real good understanding of how much Alibaba should really be priced at and worth, because guess what? The stock is extremely undervalued. Alright, so jumping into Alibaba's discounted cash flow model that I created from scratch, essentially what we're trying to do is project how much free cash flow Alibaba can generate over the next 10 years in this 10-year DCF model, bring that to the present value to see how much that cash flow will be worth today, to figure out how much Alibaba's stock should be worth, essentially how much the company in the future would be worth today. So taking a look at the DCF, we can see we got our revenues from 2017 to 2021. Now, Alibaba's growth plans to slow to 28% this year in their 2022 year, and essentially slow to even 24% the year after. Now, I kind of projected that we'd continue slowing all the way to 3%, where in 2031, the company is doing about $370 billion in revenue by 2031. As for their net income, we can see from 2017 to 2021, their net income margins have really been around 24%. It's gone as high as 29% to a low of about 20%, and the median number seems to be about 24%. So based on that, we can project our future net income, and by 2031, that will be basically about 199 or basically $200 billion in net income. And by the way, I want to clarify that all these numbers are indeed in US dollars. So now as for the free cash flow, we can see from 2017 to 2021, we have our free cash flow numbers. Now our free cash flow to net income rate, Alibaba has generally averaged, anywhere from as high as 165 to as low as 90%. So I went really conservative with this and assumed that they'd continue to generate at about 115%. Now it's totally possible that'll probably be much more. So I think 150% was pretty conservative, and we can see that means they'll probably end up generating as much as $229 billion in free cash flow by 2031 in total, right? So those are their future free cash flow projections, which is really the number we care about. But now going to the assumptions, here's where things get really juicy. So a tax rate of 25%, which is common in China. We're going to be using a discount rate of 12%, which is extremely conservative. A lot of investors tend to use about probably like 8 or 7% for Alibaba. I went with 12% being super conservative, with a perpetual growth rate of 2%, which is the average of the 10-year treasury yields. Then the current price as of me making this is about 171.5, and they have about 2.7 billion shares outstanding. So now taking the discount rate and discounting the future cash flows to bring them to the present value, so we know how much these future cash flows are worth in today's value, we can see we got all these numbers right over here. This is the discounted cash flow all the way from here to here, with our terminal value being about 705 billion, right? Essentially what the terminal value is Alibaba's value beyond a future period of time when we can no longer project it. So we're going till 2031, and we're basically saying after 2031, here's what Alibaba's valuation is going to be for a perpetuity. So now adding all these discounted cash flow numbers and the terminal value, we get a total equity value of about $1.23 trillion, which is basically a $1 trillion company, Alibaba, and it makes sense, right? They're China's largest e-commerce company, all of that. So in a way, I think it probably makes sense. And so now taking their total equity value of how much Alibaba would be worth today, dividing it by their total numbers of shares outstanding, we can see that the total equity value of each share should be $454. This is Alibaba's fair value as to how much I think it should really be worth and my personal price target. So considering the fact that the stock is right now at $171.50, Alibaba stock is actually trading at a discount of 164.76%. So just considering the calculations from this DCF model, Alibaba has a lot of upside. And you know what? My numbers might be a little conservative or a little on the high end, but I think $455 is a price target that makes sense for the stock. I mean, judging by how much free cash flow they're going to generate, their balance sheet, their rapid growth, and their ever-growing cloud market, and their overall dominance in the Chinese market, I think without a doubt the stock continues to grow, and $455 a share is a decent price target. Alright, so now that we've covered the DCF, let's jump into the technicals where I break down where I plan to buy and exactly where Alibaba could be heading. But before we do so, if you want to learn technical analysis for yourself and a ton of advanced trading strategies, go get my new book, A Technical Trader's Handbook, on Amazon. That's now the #1 hot release in the world in public finance, and so go get it if you want to learn strategies to become more profitable and strategies that have helped me help you guys catch over 100% gains simply based off the technicals. Jumping into the technicals of Alibaba stock on this hourly chart, we can see a few things right off the bat. First of all, you can see how the stock was in this massive downtrend for a few weeks now, forming lower lows and lower highs, and essentially we were forming this descending, broadening wedge that obviously usually leads to a breakout higher, and we got just that. We broke out to the higher due to massive buying volume, and you can just see the great spike. I mean, volume was really dying down, but it really picked up just before we broke out to the upside, really indicating to me that definitely a lot of institutions institutions, big buyers definitely piled up right over here. Otherwise, you would not see a major volume spike like this. Now, apart from that, after we push up to the upside, we're getting a correction pulling back to this $167 level. This was our previous lower high in this previous level of resistance up over here. So it makes sense that we'd pull back down, especially because we did get really overextended on the RSI. And you can even see how the RSI has now retraced lower. The MACD line has crossed below the green signal line, indicating that buyers are losing some of their momentum. And overall, it makes sense. You know, after such a big push up to the upside, it makes sense that we get a pullback and now start forming higher highs and higher lows, because it's unrealistic for Alibaba stock to just continue higher and higher. I think at this point, what makes sense is that the stock now starts forming higher highs and higher lows, and we see the emergence of an uptrend, kind of like in this channel pattern over here. Now, going to the 1-year daily chart, we can see that Alibaba, it's basically been a whole year since this downtrend started. I mean, we used to be all the way at 320, and now the stock's just been going down and down and down for over a year. Now, if we do continue pushing higher, I definitely expect this resistance level up here at about probably 180 to be a very, very, very strong resistance level. The reason being is, first of all, it was a previous level of support right over here, so it makes sense. Previous levels of support turn into resistance. But apart from that, we can see that we had this mini channel right over here, this large channel, right? And so you can see the bottom diagonal support line also happens to be right at that 180 level. So that very strong level of diagonal support that we had could also now turn into resistance right at 180 if we do decide to push out higher. So now that you've gotten a rough understanding of the technicals, let's talk about my price target and exactly how I plan to trade this. But before we do so, if you haven't already, be sure to go get my new book, A Technical Trader's Handbook, on Amazon. It's now the #1 hot release in the world in public finance. So if you want to learn technical analysis and a ton of advanced trading strategies, be sure to go get it. So now, taking a look at the technicals, I think right now Alibaba stock is in a good place, right? We're pulling back, turning this 167, 166 level into support, and we're beginning to form higher highs and higher lows. Now, at this point, I still think there's potential we could pull back a little more, because as you can see, we have this pretty big gap to fill right over here, all the way down at its support at 163.34. You can see right over here, it gapped up higher. And much of the time, stocks like to fill their gaps. And even though you can see this candle right over here looks like it filled this gap, I'm not sure about this. This candle is actually kind of a glitch. This did not actually happen. So it still hasn't filled the gap. I don't know why my platform is glitching and showing this massive candle. But Alibaba is still yet to fill this gap at 163. So I could see it come down, fill this gap before a continued retracement to the upside. And overall, you know, we are oversold on the RSI again. We've got a nice little healthy correction. And I think now we again continue to see a next push up to the upside, where again, I think we push up to 180. So if we break above the 9 EMA, which is the blue line to indicate buyers buying in on this hourly chart, I'll be looking to purchase, and I could see us head up to 180, where, I mean, you could look to take shorter term profit or just continue to hold. But that's where I could see Alibaba stock going if we break above the 9 EMA and continue higher. Now, if we break 180, it's very likely that the stock could head probably up to about 192, which is its previous level of support right over here. You can see support, support, support. It's a pretty big level of support. So 192, if we break above 180, is very likely. So those are the key levels to watch and why I think Alibaba stock is undervalued or probably significant upside. If you appreciated this informative video, be sure to like and subscribe. Go get my new book, A Technical Trader's Handbook, on Amazon, and I'll see you guys in the next one.